Good evening, everybody. This is John Seville with Acorn Wealth Corporation, and this is your executive summary for stock setups for the 2nd of February 2016. And of course, it's a very special day today because it is open range has just been completed. So let's have a look. We talked about in Trading Room last week about the head and shoulders pattern that we've been looking at on the S&P for a while. We'll go back to the weekly chart. You can kind of see it a bit more prominently there. The left shoulder here, there, the rounded head, and then what we're seeing potentially here is the right shoulder. Now, when you look at it on the weekly chart, you can see that we've got these contracting range candles, and obviously we're only at the very beginning of the week, but we were kind of forming up as we should if we've got a head and shoulders pattern appearing. So on one hand, we want the market to have rallied up into open range. Now, the reason why is because obviously we want to not so much react to the market, but try and anticipate it. So what we want to see with open range is we want to see that it kind of take out the top end of the market. Because if open range had kind of been somewhere in the middle here around 1840, 1860, then that means that we've got a lot of upward movement for the next few weeks and downward movement while still remaining in the pattern. What we ideally want to see is we want to see the head and shoulders take out the room between where the market's been and where the overhead resistance was, which is kind of where we're at now, so that we can kind of set the open range resistance there. So to play the bear side of the argument, that would mean that we should we could kind of hold around here, but kind of top out and then start down again. So that's the bear side of the argument, and so far still supports the head and shoulders scenario that we've been talking about. Now, to also look at the other side of the bear argument, we can look at high yield bonds. Of course, a sign of whether money is investing, corporate high yield bonds, whether the smart money is investing in corporations or not. Typically, if the market's strong, as you can see where the market's been rallying recently, these have been going up. But on today's move, we actually had a 1.08% sell-off in the corporate high yield bonds, going back beneath the moving averages off of this trend line that I've been pointing out. So there's the bear side of things. Now, on the other side of the bears, I should say, is if we just go in and have a look at again the market stats in Yahoo. Really easy places to kind of get an idea of what's going on in the market. Today looked quite bullish if you looked at a lot of different individual stocks, but then you go in and look at breaking down what the overall market actually did. Go into market data, go into stocks, and you can see if we scroll down, I'll just zoom in there for you. In the New York Stock Exchange, only 48% of stocks actually went up, 50% declined, and again in the NASDAQ, we had 48% go up, 50% decline, so very similar. So that's it's just a kind of interesting to see how the market's breaking down. And obviously, if you look at the volume, obviously 55% more down volume, 47%. So basically a split pot across the market. Now, so obviously we are holding a lot of puts at the moment as part of our kind of longer term strategy. I talked about middle of last week about locking in some of those profits because we were getting a bit of a bullish warning, and it's always good to just at least take out again your original capital, so you're playing purely with house money at that point, and guaranteeing yourself a profit, or at least definitely not a loss if you've taken out your original capital. I'm still of that mindset because obviously we haven't broken range either way yet, and we need to see that happen first. But obviously when we do look at the S&P 500 on the daily chart, you can see that kind of swoop that we're getting, but coming right back into that previous expanding range downward channel that you can see here. If I just make those two lines a little larger, we're going to be running into that resistance. So the argument for this to remain in a head and shoulders bear scenario is to come up and maybe test this intraday at around 1955 and then close back within it and then start the decline kind of to the middle of this week, middle to maybe even Thursday, for example. Okay, so I'm not looking for too many shorts at the moment. I'm quite happy with all the ones that I'm holding, and a lot of the ones that we're holding are right under resistance still. So I mean, we look at things like ILMN, one of the new short picks. I mean, it plummeted down last 2 days. Certainly doesn't look like any kind of stock that I would buy. We look at PII, Polaris. We talked about on Thursday, if you're a short-term trader locking in some profit, as we felt it was likely that it would probably rally up, 7-8%. That's exactly what it's done. It's rallied 8% over the last 2 days. But longer term, again, still doesn't look like something I would buy. Still looks like it's in a shorting potential. So I'm quite happy with holding onto those positions. Obviously, another one to mention, GILD, done really, really well. I mean, that was one of our one of the stocks that that I think a few people doubted me on this one because they thought, well, it's such a strong company, and it's one of those ones you could just bank on and forget about, and never lose any money. Well, Gilead's had a big drop, and if you have a look, it's gone straight underneath that smart money support, and didn't make any new highs today. So a lot of those puts and so forth looking really well. I'll only mention two of the ones off the long list. CMG, Chipotle Mexican Grill, also was a dark horse, one that obviously was fundamentally something I've really got no interest in, but technically it was a lovely little fallen angel pattern, and that had a nice pop today as well. So we talked about obviously the buying the calls on that one, and those had a nice jump today. And the other one, NUGT, of course, was one of the alerts from last week, and that's had a beautiful run as well. It was up 6.43% on Friday, and up 9.08% today. I actually own some call options on this, and those are up 45% today. Again, it's really up to you how you want to play these. I mean, buying call options on a triple leveraged ETF is obviously pretty much the high end of the risk level that you can take, and I've been in favor of a bit of risk at the moment, so that's my personal preference. But this could easily rally up, as we talked about, kind of up into this 30 range and above potentially. But again, look for locking in some profits along the way. So until we really break open range, one way or the other, I think that there's a heightened level of risk or kind of an unknown variable right now, because we are at that point where the market could either enter some short-term momentum and could squeeze like we saw in October of last year, or we're just simply setting up for a short squeeze and going right back down. So again, this is where I'm going to be locking in profits, because a lot of those put positions I can just get straight back into if and when the market turns back down. I may lose a bit of potential profit if it was just to turn straight away tomorrow after I sold them, but it's unlikely that the amount of profit I stand to miss out on is greater than the amount of profit I could give up by letting it rally, hoping it turns back down. So again, right now, with a lot of the positions, I'm happy to lock in some profits and put the money straight back in once we start breaking down into a reversal pattern on the S&P 500. Now, in the short term, the types of stocks that I like to play to hedge against those puts and those short positions are are usually very speculative, smaller cap companies because they don't really follow the market as much. They kind of go to the beat of their own drum. So I selected two hedges for your interest tonight. And the first one is CUDA Networks. They've been really punished, obviously, over the last little while. They're down now from what, $48 to 10. But they had a good rally today off of the root. Well, they're working with Morgan Stanley to have for a buyer. So there's a possible buyout rumor, obviously, and they're looking for one on the table here. 11% rally on 2.3 million shares today, and I like this as I'd be using one cancelled other, an OCO order. So I'd be looking for it to either break out above 1207, which would be a break, 1209, which would be a break of the 20-day moving average, as well as the 22.3% Fibonacci. So we're looking at either a continuation trade, and you'll see that kind of makes sense when you look at the hourly chart. You can see the way that that's moving, just kind of lifting very, very quickly off the moving averages. So we wait for it to break a new high, confirms the momentum, and get in kind of around that 1209 area. Or we've got a very short-term flag. We'll break that down to a 15-minute chart. And you can see that we're starting to kind of top out a little bit. And so we could get a pullback to kind of this mid area. So I've also putting in a 1157 buy. So as it one cancels other order, what's going to happen is if it pulls back to 1157, it'll trigger in and cancel my buy at 1209. Or if it just rallies through at 1209, it'll get me in without missing out on the trade. Either way, I'm looking at a stop loss at 1112. And my two targets on this is 1357. Okay, and this is looking at the resistance and the Fibonacci's as well. You can see the Fibonacci right there, 38.2, 61.8. So looking at 13.57 as target 1 and 14.83 as target 2. And the other little speculation here is the Bancorp. Now, it's a financial company. It's in the Midwest region banks. I've never heard of it. Maybe you have. Again, those who know me know that doesn't factor in too much into my selections. But this is one that has, again, kind of its own little personality. It had a reported a $19 million profit in its earnings announcement recently. It was favorable. They've been really badly beaten down, and so this one I didn't mind too much either. Very long wick. So that long wick and strong hammer candle shows you that there's a lot of buyers around that $4.50 area. Again, we'll break it down to the 1 hourly chart. So the way I've approached this, again, when we look at the hourly charts, you can see that there's a nice big kind of stem of strong buying there. Then it kind of just flattens out, and off we go. Now this is a low volume stock, so it's obviously by definition is considered more risky. But in these types of markets, I also find that stocks of this size and volume are not being beaten up by the high frequency trading boys as much. They're kind of beating again they're marching to the beat of their own drum. They can kind of do what they want on their own, based on their own kind of trader base. So on this one, I was looking at a buy at 512, so it's a buy stop. Looking for it to actually break through a little bit higher here, and looking at a stop loss at 477. So we basically got about 30 cents or so of risk, or 40 cents or so of risk. And the first target I'm looking at that is 593. And where I've come to that conclusion is how I've come to that conclusion is by once again just kind of looking at where the shelf of support was. You can see that we came down quite sharply here, had a quite a quick rally from $6 all the way to $6.80. That's obviously close to 15%, just over a few days. So we knew there was some power there. Once it broke that shelf of support, that's where the drop really accelerated. So we know that that's something to be concerned about. And so that's why, so $6 is really the target. But obviously, I always like to go a little bit shy of those kind of psychological numbers, which is why I picked 593. Now, again, these are hedges that meet the technical formation of these types of individual kind of fallen angel type stuff that really just excels even in any market. That's my favorite strategy. So those are my two hedges and my commentary for tonight. I hope it helps. And ladies and gentlemen, I look forward to what should be a very exciting trading room tomorrow night. Take care and happy trading.